take a moment, and this will be the beginning of the official recording, if you will. So welcome, everyone. Let me introduce VC Lab briefly. VC Lab is a company that's really designed to reinvent venture capital from the ground up, using first principles to be a force for good in the world. Right now, venture capital is isolated in a few cities around the world. It's, predominantly managed by men, and the large amount of investments tend to be biased based on whatever the men running the industry want to invest in. We see that as problematic because venture capital is a R&D arm of humanity. Essentially, we're taking high-risk capital, investing it into new ideas, and hoping that they're going to change the world. And it makes little or no sense that this industry of innovation, this industry of humanities research and development, is so concentrated in small pockets and run by just a small number of individuals. So when we want to reinvent venture capital from the ground up based on first principles, it should be everywhere in the world, right? Certainly all the major cities, all the major regions, and it should be practiced by all different types of people: men, women, all races, sexual preferences, etc. And then we can have a thriving venture capital market in the world that is actually investing in things that improves the plight of humanity on this planet. And that's where we're headed. So one of our premier offerings in this effort to reinvent venture capital as a force for good in the world is our free venture capital accelerator called VC Lab. The deadline for cohort 9 is November 6th, Sunday, November 6th. And right now we have over 2,000, almost 2,100 applicants. So if you have not applied and you're interested in applying, I recommend you do so today. A bunch of acceptances are going to go out today. And the program is designed to have participants close on a venture capital fund. So even if you're on Fund 1, Fund 2, Fund 3, whatever fund you come in, we're going to help you get to a close on capital for that fund in 6 months or less. Now, just to put things in perspective, normally when you start a venture capital fund and firm, it can take 18 to 24 months for you to get everything together and get to a close. So we're talking about getting that done in about 6 months. Now, what normally happens when you're in that sort of getting started in 18 to 24 month time frame is you're like, I'm going to get started, and you kind of do things out of order, and you're not moving fast enough, and you don't get any momentum. So it just takes forever. And then finally you're like, okay, I need to concentrate and get stuff done. And then in the last few months, you get really organized, you pull everything together, you push, and you close. Well, we're getting you organized, putting everything together, and helping you push to close from day one of the program. And if you follow the guidance of the free accelerator, as I said, the average close time right now is roughly 6 months. A lot of people close in 4 months, 5 months, some in 6 months. So it's like a bell curve with the top of the bell around 6 months. And I'll tell you how we do it, okay? First of all, Mike and I and the team at VC Lab have closed a lot of funds. So we know you need to do this first, this second, this third. And if you follow that sort of a guidance, which is codified in a weekly curriculum, then you will have done everything that you need to do to close. And why, again, it can take a long time if you're not following some sort of path is you do things out of order, you take a little bit too long to do one thing and you don't spend enough time on another thing, and then you realize it's a mistake. Well, we know exactly what you need to do when you need to do it in order to close quickly. And so we just outlined it in the curriculum. And it's, 20 hours worth of work a week. And that's in the beginning. And then when you're actually in the process of closing the fund, that can step up to about 40 hours a week. So this is not a learning program. So if you're like, well, can I learn about VC? Yeah, you can learn about VC. There are lots of programs that cost like $25,000, $80,000, whatever, the Kaufman Fellows, VC Unlock. You can learn all about VC in those programs. Learn, learn, learn. This is do. You are going to close. So if you want to learn, I'm happy to send you to programs. They're often very expensive, and they will teach you a lot of stuff that might be useful at some point in your life. If you want to close a fund and start investing in 6 months, then VC Lab is the program for you. Now, on top of the curriculum, there's a couple other things that we offer for free that are super useful. Number one, we have an amazing community that includes roughly 1,000 alumni, human beings, the less number of funds, and experts. And that community is on hand to help you every step of the way. You will never be alone starting your firm and your fund. You will have people there who've done it before, who are a couple steps ahead of you and who are by your side, and they will answer your questions, assist you, give you guidance, etc. It's mainly in Slack, but there's lots of other ways the community communicates. There's events and things like that that the community does. And it's a fantastic resource, because if starting a company is a lonely journey, starting a fund is an even lonelier journey. Like, a lot of VCs are kind of helpful-ish to one another when starting, but they're also very sharp-elbowed because it can be a competitive space. So a lot of times you're truly on your own, but you're not on your own when you do it with VC Lab. Last but not least, there's sessions every week. There's an AMA session like this with Mike and I, no long intro. We just dive right into questions and top, advice. So every single week, you will sit down with Mike and I and other experts, and we'll answer your questions and help you with things that you're dealing with to launch the fund. On top of that, every single week, there's a mentoring session. And the mentoring session is led by a domain expert in whatever the program is working on at the moment. So if we're doing financials or modeling, there'll be a modeling expert. If you're on the sort of legal time when you're starting to look at incorporating your entities and setting up the fund, there'll be a lawyer. So every week, there's a sort of a theme in the curriculum, and then we'll have experts coming in as well, and they'll either give a talk, answer your questions, all the above, and help you along the journey. So again, we have a curriculum, we have a community, and we have, last but not least, a pretty amazing team of experts and mentors that are available every week to help you. And the reality is that right now, and in a minute, we'll switch over to your questions. This is working really well. So we've launched a few hundred funds and firms. So over 200 through cohort 6. Cohort 7 and 8 are kind of wrapping up, and we're entering in cohort 9. And I believe between cohort 7 and 8 will be, over 300 total firms that we've helped accelerate. Roughly 250 firms will accelerate just this year. Okay. And so depending on how you look at the market, VC Lab is over half of all new venture capital firms created worldwide right now, and growing. Now, so as a final point on all this, if we're looking at these alumni, they're outperforming the market. Okay, so they're closing faster, which is a huge advantage, right? waiting 18 to 24 months versus 6 months is a big deal in your life, in the fund execution, all this stuff. But not only is it faster, they're performing oftentimes better than their peers. So we're seeing a lot of funds launching, coming out of the gate with positive IRR because they've followed guidance in the program, like warehousing a deal or things like that, that gives them a heads up. So a lot of funds start and they have a J curve because they have fees in day one and they're making investments. Those investments aren't getting marked up right away, takes a while. So their IRR goes down and then over time it goes up, AKA the J curve. So a lot of our funds don't have the J curve because we give them advice on how to come out the gate with positive IRR. So at this moment in time, and VC Lab itself is only a couple years old, our firms are outperforming the market. Now, of course, you only know how firms perform after 10 years or so when the firm life is done, but the early indications of success are excellent. So as many people have said, if you're smart and you're accomplished and you're starting a fund and you're not joining the leading and best program in the world to help you launch your firm, then you're really not that smart. That's like, it's free and it's good and it helps you beat the odds. So like, why wouldn't you join it? But you know, whatever. I don't know, Mike, if you want to add anything or we can jump right into questions, but
yeah, so I would say one final thing, and let's hop on this. This is for folks who want to launch enduring venture capital firms, not funds. Okay. So if you're kind of working on like a little syndicate on the side, which is maximum respect, not trying to like say that there's anything wrong with that. It just, this is not a good fit. If you're doing like a AngelList fund or something like that, probably not a good fit. This is really for folks that want to build like the enduring venture capital firms of the future. And that's what we're helping folks do. So,
I see a question in the chat. Pop it in the Q&A, please. Yeah, sorry,
yeah,
Mike.
So just think about that as well, because that's something that we look for as well during the process. So, all right, let's start. We have a bunch of questions. We have 15. So upvote these questions. So if you look at the Q&A, there's like a little like thumbs up button. It looks like this. Just ping it because we want to make sure that we get the top questions in first. So, you know, first question from Amber: how does the program run in detail, please?
Mike, I can pull up that chart and then share it on screen. So if you just
sure. And here's also the Amber, I also put in the chat a link with the curriculum and stuff like that, so you can see it.
So for everyone to answer Amber's question, so this is sort of the, you know, of course, month 1, month 2, 1, 3, 1, 4, and these are each of the weeks, if you will. Of course, there are holiday breaks and things like that in the program. So this is an abstract timeline for you. But if you look at it on a high level, month 1, we're really going through and finalizing your thesis. You may think you have the best thesis in the world, and there's a pre-curriculum on our website that Mike can paste in the chat. If you do the pre-curriculum, you're going to come in with a heads up, but you still are going to need just to refine your thesis. Mike and I launched a fund, and it took us, you know, over a month to do the thesis as well. You got to test it with people. You got to talk through it with your peers. So the first month is just, even if you have a thesis, refine your thesis until it's really good. Then you're going to work on all your fund materials while you start doing some pitching. Then you're going to work on your ramping up your pitching and finalizing your model and economics in month 3. And then finally in month 4, you're going to have that momentum from pitching. And for many people in the program, you're going to start closing. Now, as I mentioned, it's a bell curve around 6 months for closing. So many people will start closing at 4 months, some people at 5, pretty much the bulk of the cohort around 6 months, and then some will tail off as long as even 9 or 12 months. But the majority of people will be getting that fund set up and closing around 6 months. And happy to go into further detail, but let's get that through as many questions as we can.
Yeah, and I see there's a lot of questions still coming in the chat. We're not looking at the chat for questions. There's a Q&A button at the bottom of your screen. You may need to like expand your screen, select that, and then put a question in there, or just upvote questions that you see. Question here from Max. What are the most important factors, I guess, in order of importance to be admitted into VC Lab?
Yeah, so look, I was going to try and pull up a sample application to show you what it looked like. Let me look at this. Oh, I'm logged out here, so let me log in and do that. But what if I can? So we have an application scoring methodology, and basically, let me see it. Yeah, so we look at the size of your network, and this is in no particular order. So I'm just going to sort of read from top to bottom. We look at the size of your network. If you have a small network, it's going to be hard for you to run and raise a VC firm, or VC fund, because venture capital is a networking business. Like you got a network to find portfolio companies, network to find limited partners. So network's really important. We look at your background. Have you done investing before? Do you have experience in VC? Well, like, what's exceptional about your background? We look at your thesis. Are you trying to do something that's like not realistic? I'm raising $1 billion fund. It's like, well, if you've never done anything before in your life and you're just like, I'm going to start $1 billion fund, that's just not realistic, right? So we don't want to waste our time being like helping you come back to reality. We want to help you achieve your vision. And so we need to see that you have a realistic thesis.
Also, if you're working on, if you've built your entire career in one space and you're like let's say you were like in healthcare or something, and then you're like going to launch a crypto fund and you have no experience in crypto, like that's just hard, right? It's just hard for LPs to believe that you can execute on that, right? So it's going to be hard for you to close within the boundaries of the program.
Then we say, like, what's your need? So our program is an accelerator, and you will meet some LPs. But if you're like, I just need to meet LPs, well, then this is not a good program for you, because and frankly, that no program is good.
There's no program.
Yeah. So there's the whole article just came out in Vanity Fair about how like the #1 LP conference in the world, quote unquote, was a con. Okay. So there's if someone's like, yo, meet LPs with us, they get like 1 strike in the con category. So you will meet a few, like 3 or 4, maybe 5, maybe 7 LPs with us. And we're definitely telling you, like, don't come to us to meet LPs. And frankly, as I said, if someone's telling you to go there to meet LPs, ignore it. So if you write, I want to meet LPs, or like, great, I don't know where you're going to go to do that, but this is not the place. We're going to help you launch your fund. We're going to give you tools to find LPs. We'll help you find LPs, but you're not going to be meeting LPs here. So your need is another category. And then we care a lot about your video. Do you look professional? Can you raise capital? If you can't pitch on video, you're going to struggle to raise capital, because most LPs which is a great thing for the industry, are doing first meetings on video. Now, last but not least, if you're recommended by one of our alumni, that goes a long way. So even if those other things are kind of weak, but you're recommended by alumni, that's a great check in your box. So that's a detailed answer on what we care about for admissions. Happy to go into further detail about any one of those, but that should answer most of the high-level admissions questions. Okay.
Is this program suitable for non-experienced investors? So look, I think we have seen some folks with a limited level of investment experience be successful, but that's because they've been at the intersection of lots of incredible deals and lots of incredible investors and startups. So for example, people that run large conferences that are startup and that, large startup conferences and things like that. So yes, folks like that can do really, really well. However, if you don't have that, if you don't have this like incredible like network of startups, you probably want to develop that skill and get to that level where you actually have that, so that you can actually do well in that. But we have seen folks with limited amount of investment experience close on their fund. No question, you know, like the very limited amount of, so it does work for sure. You just have to make sure that you're at the intersection of these like deal flow and LPs in a really interesting way. Hi, Mike and Adair. Is there a preference given to folks not selected in previous cohorts? You know,
listen, so let me address this one. We just redid our entire admission system, and I read you the admissions criteria kind of verbatim from the screen. So it's possible that if you didn't get in before, so before we kind of had a sense of the type of applicant we wanted, and then we had multiple people review and score applications. And so as a result of that, a lot of people did not get in because someone would think they're good, another person might not. And here's the reality. We're going to have roughly between 2,500 and 3,000 applicants. So, and we will accept no more than 250. So we're like at maybe 300 if so it's like 10% are going to get in. And just otherwise the program isn't easy to run. So the new scoring system should increase the odds for people who have applied in the past to get in, the new applicant scoring system, because it's objective versus subjective. Now there'll be some people that fall in lower scoring echelons, and those will then go through the previous review process, which is multiple people screening them. So there'll be top people that get in right away, and we're going to accept a bunch of people today. Lots of people are going to get accepted today because we're doing a whole big sprint on scoring. And then people who are in the middle category are going to get reviewed by different individuals, and that should be coming, if not later this week, early next week. And here's what I would say: if you've applied before and you didn't get in, application video in the past was like a big one, and it's less important now. But I would make sure, update your application video. The other thing that will help you a lot: make sure your thesis is in good shape. And last but not least, if you can grow your network at all, that definitely helps. And people's networks are growing organically between applications. So that will just increase your chances.
How do you turn a soft circle into a hard circle for an LP commit? And by the way, everybody, I see there's a lot of questions now left with only 2 upvotes. So look through the list and just start upvoting stuff, because we have 25 questions in roughly 30 minutes. So, I'd like to try to go through the ones that are the most popular for everybody's sake here. So we would really appreciate it if you do that. But back to the question: how do you turn a soft circle into a hard circle for an LP commitment?
I can paste it into the chat, Mike. So we have something called a pact. It's a PACT. It's an agreement. It's a non-binding agreement with a limited partner to invest in your fund. And I just pasted a link into the chat. So when you have someone that's interested in investing verbally, and so that's a soft circle, when they've written you, I'm interested in investing, or they've told you, I'm interested in investing over the phone. If you want that's soft circle. If you want a hard circle them, which means they're committed more seriously to investing, you can have them sign this non-binding letter of intent to invest. And that's an easy way to signal that a soft circle is now a hard circle. And the way you ask them to sign, it's very simple. Say, hey, we're going to be closing in a few weeks' time. I want to send you the materials. Can you sign this agreement and fill out some information so that I know how to address you and get your information for those closing materials? That's one way. There's a ton of ways, actually, and we can talk about that more if you're interested. Okay, let's keep going.
What's your average fund size coming out of, coming out of the accelerators? I think.
Yeah, so we can, so we're doing over half of all, at least if you look at the 2020 to 21 and 20 numbers, we're going to be accelerating over half of all new venture capital firms in 2022. So our stats are industry stats. So if you look at industry, so I think right now it's roughly 17 million average fund size. And guess what the average of fund sizes in the world is? 17 million. So we're beating the averages in like speed and things like that. But in terms of fund size and other stuff, we are the average.
That being said, it's always a good idea for fund ones to be smaller, and we can talk about that. Could you talk about the differences between VC funds, VC incubators, VC studios? Do you see any particular challenging launching non-standard VC funds like studios?
Yeah, so we work with what we call early stage. So look, there are people who have fund to funds that have come in. There are people who have later stage funds that have come in and used the program successfully. But generally speaking, we work on early stage venture capital firms. We do accelerators in the accelerator, ironically enough, and we do venture studios. Those are the three things. So it's like we do pre-seed, seed, Series A is generally the stage. And so when the question's like, what's the difference between a VC fund, an accelerator, and a venture studio? At the end of the day, the big difference between, you can bucket them in two groups. You have the VC funds. That's usually a 3-entity structure with a management company, a general partner, and a limited partner. Okay. And then you'll have accelerators and venture studios, and they'll tend to have more entities. So you'll have a management company at the top. You'll have oftentimes a fund with a GP and LP on one side. And then on the other side, you're going to have your venture studio and the venture studio companies, or your accelerator and the accelerated companies. So instead of one unit, you'll have one thing at the top, the man company with 2 units. And that's the main difference. So for a lot of people that are starting venture studios or accelerators, they oftentimes start doing the venture studio or the accelerator first before coming into the program, but not always. And then they add the fund next to it. And we support that in the program. There's a whole venture studio channel, et cetera, et cetera.
In which countries do most of the funds are launched via VC Lab operate? Do US applicants have an edge over EU applicants? So no, over 66% of graduates are outside of the United States, Julian, just FYI.
Yeah, should I show that chart, Mike?
If you have it, we could do it. Otherwise,
yeah, I can pull it up pretty quickly. So this is an older one here. So let me just, whoa, I made it really big, but I'll share my screen quickly. I want to just, here we go, sharing on the fly. So hopefully you guys can see this. So this is through cohort 6 and in the different areas of the world where we launched firms. And so as you can see, it's all around the world. And cohort 7 and 8 are even more global. So, and they're going to launch a lot more firms because we've been growing like crazy, if you will. And so cohort 9 should be the largest yet. It is so far the largest on every metric. And yeah, and it's even more global. So we're moving, as you saw in that diagram of the world, or whatever image of the world, 70 firms were launched in the US to date, and that was about a third. But what's happening now is like that number is decreasing and the rest of the world is increasing.
How do you determine someone's network? Is it just based on LinkedIn?
Yeah, primarily we looked at LinkedIn.
How is the Venture Accelerator funded? Trying to understand kind of like the alignment here.
Yeah, so it's, let's talk about that. So we make, so to take a step back, VC Lab is a business that operates a number of different things, including a free accelerator. Actually, most of the stuff that we do is free, because we are a mission-based organization to transform venture capital into a force for good in the world, and we are succeeding. Now, with that said, we also are for profit, so we make money. We make money because when we went out so VC Lab was started as part of the Founder Institute because we saw this problem that needed fixing. And then it kind of blew up in a good way. It totally just grew like gangbusters. And so we spun it out. When we spun it out, we didn't have a revenue model or a business. And what we did is we talked with every single person in the program at the time and as many alumni as we could. And we said, you know, what do you need? And we did what are called customer interviews. And universally, everybody was like, oh my God, forming these funds and running the funds is very, very difficult. So right now, the premium component of the business is for a select number of people in the program, you have to apply, you have to get accepted because we have too much demand. We do all of the formation and all of the back office much cheaper and much better than you might get elsewhere. Just to give you a sense, we have a 94 net promoter score on our formation and fund admin offering. The program itself, the accelerator, has an 84 net promoter score. But just to give you a sense of what a 94 net promoter score means is that every single customer filled out the NPS survey and one of them gave us an 8 out of 10. So obviously it's pretty good, but as I mentioned, it's way more demand than supply because we work only with a limited number of firms so that we can provide the best possible experience. And that is the primary way that we make money right now.
Yeah, so all of our premium services are always applications only. This is not like a freemium service that's designed to kind of convert into a premium or anything like that. So
yeah, lots of people go through the accelerator and, you know, never give us any money, and that's fine. Like we're here to make venture capital into a force for good in the world. That's if we succeed at doing that, like hopefully we make lots of money as well, but that's the primary goal.
How have you seen the recent events in the economy affect investor appetite, if negatively?
No effect.
Around it?
Literally no effect. In fact, let me show another little chart. We provide all of the software that you need to run your venture capital firm for free, right? Again, one of those other things we do for free. And as part of that, people are signing investment agreements in the software. And if you look at the investment agreement signed, let me just see if I find it here. So I'll quickly share that. Again, sharing is not the fastest experience here. So this is the number of investment agreements signed. It's going up and it's at all-time highs. So it's not the global economy, inflation, like debt crisis, and whatever you want to call it, the equities, the crypto implosion has infected at least our segment of venture capital. Not at all. It's like through the roof for us. So we have, and generally speaking, venture capital is inversely correlated to negative downturns. So when things are bad, VC is good. This is historically true. And for whatever reason, right now, VC is like exceptionally good. Maybe the economy is exceptionally bad, but as I said, it's not affecting us at all.
Have you guys incubated a fund supported by a decentralized structure like a DAO before? So no, because we're launching venture capital firms. Okay, and venture capital firms cannot support these vehicles. And if there's nothing wrong with it. By the way, this is not one is better than the other. It's just that we're specializing in venture capital firms, and venture capital firms generally can't even take in or make investments in tokens and things like that, and also are structured a very specific way for a very specific purpose. and they always invest in equity in startups, basically.
Right. So tokens are prohibited by most documents, and they're also in most domiciles considered more private equity versus venture capital. So they're not even allowed for venture capital firms legally to do, FY. So if you want to do like token investing, you're going to be starting what's called a crypto hedge fund versus a venture capital fund. Mike, we got a lot of questions. So everybody do me a favor. Like Mike and I are here to help as much as possible. So if you can vote up your questions and with the thumbs up, we're going to go a little faster now and try and get through as many as we can. Okay. So, but get those thumbs up clicking going so that we can get the most popular questions answered first. Thank you.
If the fund consists of 4 partners, do all of them have to take the part of the program, or can 1 of 2 of them do the program? It's best for you to have all partners do the program, because what you will do is you will find that some partners maybe aren't as committed as you as part of this experience. And maybe you want to make sure that those folks are not managing partners, and maybe they're general partners or venture partners or something like that. So you just really want to make, this is a really good way to kind of stress your relationship. Or it may turn out that everybody's all in and wants to go ahead and do it. So it's highly recommended that you bring in the entire team. And again, this is for managing partners. These are folks that are managing the fund. If it's like a kind of a venture partner, someone that's like helping out part-time, almost in an advisory capacity, then this program is not for them.
Great answer.
Do you learn how to find LPs? Yes, you do.
Yes.
Spend a lot of time on this. So
so as I mentioned, there are 4 months of the program. For 2 of the 4 months, we will be helping you with the tools, the knowledge, and the processes to find and close limited partners for your fund. Now, everyone is going to have a slightly different thesis. I've never seen 2 people with the same thesis in the program. And by the time they finish the thesis, many times they start out similar, but by the time you wordsmith it, work it out, figure out what you're doing, it's going to be different. And every different thesis is going to appeal to different limited partners. And so that's going to, and we're going to help you to find the perfect limited partner for you. But we're not going to be making limited partner intros, as we said earlier.
Can you please provide some examples of the funds you have helped build and their results? Thank you.
So Tatiana, we can't talk about funds, okay? There's something called general solicitation. So whenever a fund is fundraising, they are bound by the local regulations of where the fund manager lives and citizenship they have and where the LP lives. And in most places in the world, you're not allowed to talk about your fund or your venture capital firm either when you are fundraising. It is prohibited. It's called general solicitation. And the penalties in Europe are very strict. The penalties in the US are not great. You could be banned from fundraising for 10 years. So there's some funds that have closed. So for example, or have done other things that allow us to talk about them. So for example, the #1 TikTok influencer in the world, Charlie D'Amelio and the D'Amelio family started a fund with the top decile venture capitalist, Doug Renert of Tandem Capital. That fund's called 444 Capital. We've helped them. There's a professor of venture capital at Stanford, R42, Ron John Nag. He's closed a fund and it can be talked about. But on the whole, it generally, it's not our place to talk about these funds because either they're in the process of raising, which most still are because we ourselves are only 2 years old. So the oldest fund is under 2 years old. And it takes oftentimes after the first close more than a year to close the fund. So again, it's not our place really to talk. But as I mentioned earlier, we know the stats, and a huge percentage of our funds are not experiencing the J curve. So they are the top performing new managers according to the data that we have now. In 10 years, we'll see if that still is the same.
What's the cost of fund formation when going through the program? So, Brandon, it really depends on where you are in the world and how you're going to set this up. So I can't give you a range, but eventually when we get to that point, we do try to give you some general ballparks on that and how to work that, right? Because there's, legal, there's cost of that, and that changes depending on the country. There's the back office stuff, and that changes depending on how you're setting it up, fund size.
Timing also changes. So Europe and Asia are very slow if you're domiciling there. So just about the cost, everyone. So you're going to have cost to set up a fund, for sure. You're going to need to spend on maybe travel for sure, some internet infrastructure. You probably will need to go without a salary for some period. So you're going to have costs to set up a fund. But most of the fund expenses that are to set up the fund and operate the fund are called fund expenses, and they're covered by the fund itself. So this expenses to set up the fund are referred to as organizational expenses, and the expenses to run the fund are called fund expenses. Both those categories of expenses are reimbursed by the funds. The setup expenses are normally capped, and the cap, unfortunately, is often either exactly equal to the amount that you spend or often a little lower. We work with fund managers to get it as close as possible, the cap, to what you spend. So you're not going to be spending money out of pocket to set the fund vehicles up.
Are there any tips to getting our applications accepted? So we talked about the video, that's important. So we definitely will put a lot of emphasis, because you're going to be pitching a lot of people on video, and that's just a fact. So we're going to be looking at that and making sure, we're looking for folks who have the right expectations. I talked about that, right? So there's, some, if you're like, I don't care about this, the only thing I want are like LP introductions, it's not a good fit, for example. So things like that.
I would look, I mean, the simplest thing, Tiffany, is go back to your application. You should have a link somewhere to it, or you can click any link with a code equals, and that is your private link, and it will give you access to your application. And by the way, if you change your password, the code gets changed as well. So there's ways to reset the code. If you've shared it out by accident, just change your password. But back to the point. So just read your application and say, is like, does this portray what I'm doing well? And if you do a good job with it, we want to try and help everyone that we can. Right. The problem is that we have super famous and accomplished people apply, like very famous and very accomplished. And, I worked at the UN and I ran this massive nonprofit, and I've done a fund before, and I've, now I'm serving on XYZ board and this and that. It's like, whoa, okay. So we kind of have to let the super accomplished people in that have like a no-brainer shot of launching a fund. And that just, what that ends up doing is it makes it a bit harder for very strong applicants, because those spots get filled. So the best thing that you can do is just make sure that you have the strongest application for you. And I can tell you, as someone who reviews every single application, so I review every single application, we give a lot of people a shot, because we don't want it just to be like the who's who of humanity, which will apply. We also want to give people who are launching funds in tough areas like Mongolia or Sierra Leone or a shot, right? This is about really changing venture capital into a force for good in the world. So we want people who are of different backgrounds, or student-run funds or things like that. So we want that diversity. But again, you're competing against some people who have really just accomplished an incredible amount in the world.
Do you have any preference areas for fund theses, healthcare, life sciences, climate, fintech, and so on?
If you're going to be making the world a better place, that's already that gives you a big thesis leg up, right? We're about helping. There are a lot of managers in the world today that will fund anything that moves that makes money, right? So most venture capital firms today are still generalist. And like, if you come to them with an idea they think will make money, they will fund you. Some of those ideas are super bad for the planet. Some of those ideas are just wasteful of human talent, like Meta. And, you know, we're just like, okay, we have enough of that in the world. So we still have some generalist funds and things like that. But if you're doing something that's going to make the world a better place, you're going to have a much better shot at getting in.
How often do you run cohorts? About 4 times a year at this point, almost every quarter, basically. How do you define success in the program? What should a participant achieve in 16 weeks? Close.
Yeah, I mean, look, there are 4 reviews in the program, or well, 3, and then you have to, so technically the 4th is, as Mike said, close. But there are 3 that actually, because sometimes it takes you longer than the program to close, but we keep checking in on people that finish the program. And if you finish the program, but you don't close after a year, we remove you from the community. So our graduates shrink over time because some people just don't close. And we're like, okay, this is a program for venture capital firms. If for one reason, you know, someone in your family gets sick or whatever, we no hard feelings, you can't be part of the community. So the 3 reviews are during the program. Is your thesis good enough to close? Are your materials good enough to close? And do you have enough circled interests, soft and hard, to close? And we check. And if your thesis isn't good enough, your presentation isn't good enough, or you don't have enough circled interest, we invite you to the next program.
We're applying shortly. Schedule shows that the day, but not the time. You know, what can you give some more, context there? How many hours per day is required, and so on. So, you know, we generally run these sessions at 9 a.m. Pacific time. That tends to be the best time for the cohorts. This is going to be on Tuesdays and Thursdays. So Tuesday, we're going to do an AMA. That's an hour. Thursday, we're going to do another session kind of like this with a mentor. That's an hour. And then you should, you know, budget at least 20 hours a week, if not more, for all the activities that we have set up for you, and as well as the sprints that we're providing you with, Pierre. Let's see. I submitted my application last month. When can I expect to hear a response on the decision?
So we're going to be accepting a large number of people today. It's just we moved over to the new scoring system that I mentioned. So we wanted to wait till as many applications were scored in the new system. So I accepted with the team like 20 people yesterday, and we're rescoring a bunch of people today. So there's going to be a huge number of acceptances today. I don't know, maybe 50, right? Keep in mind, there's only like 300 people. So 50 is like a big chunk of them max that get in. With that said, if you're not accepted today, we didn't get to scoring your application, or you're in that bubble, which needs additional review. And so that might take until the even after the final deadline.
You know, I don't understand your question, Brandon. As a new program, I'm going to read it though, so everybody sees. As a new program, what's your biggest stub story thus far? I'm not really sure what you mean by stub. So if you want to post in the chat what that means, maybe we can get back to it.
Yeah. So we're not that new, right?
Yeah.
Just as an FYI, and I'm going to look up what stubbed means. Does anyone know what stub means? Maybe it's a typo.
Let's go there. We have 3 minutes and we have another AMA after this, so we gotta go.
Yeah. Okay.
What
So
is
just
your
quickly, we're
experience?
not a new program. We're 50% or more of all new venture capital firms worldwide will be accelerated by VC Lab in 2022. I think that, and I can tell you, because I look at these applications, the managers that are coming in the program are like the top human beings on the planet to be running funds. They're professor of Stanford, for venture capital. They're the top AngelList syndicate owners. They are like heads of, state, like famous athletes, famous influencers. Like I just would say, like, I think we're far beyond like a new program without a track record. We are the market leader by a large margin.
As a first-time fund, how big is having a GP commitment factor? Or do you need skin in the game to set up a fund?
You're going to need to commit 1% of the fund size in a capital call structure, like all the other LPs, for most funds. If you're a smaller fund, sometimes you can say 0 and the LPs are okay with it because you're not going to make a lot of money in management fees anyway. So putting skin in the game is not necessary, but 5 million or above, you're probably going to need to be putting 1% in a capital call structure.